Hey everybody, how we doing out there? Doc Severson with you here tonight. We're going to be doing some fractal energy coaching. This is session number 1. Welcome aboard. Glad to see you guys made it here. I know it's a little bit of a rat maze to get to the coaching session. You have to go through the fractal energy class and then find that section up at the top. But I guess you passed the first test. You're able to find your way here, so congratulations. How's everybody doing tonight? Good to see all you folks out there. Welcome aboard. Welcome to the program. I'm so pleased that you've decided to join me not only in the masterclass, but also in the coaching session alone. And it is my desire to make it much more than worth it for you and your time here. So let's get right into things here. We're not going to be giving any trades tonight, so don't worry about that. No wagering on the outcome of today's presentation. Today's topic, and this is the only topic that we'll do today, is single time frame price action. Single time frame price action. So we're not going to confuse things. We're going to keep things simple, and we're going to keep drilling on that price action. I'll show you how we're going to do this so you can train your eye to do this. Once you train your eye to do this, then you can train an algorithm to do it, and then you're set. All right, so for a single time frame price action, tonight we're going to focus on the summation of the first 5 modules, which ends with single time frame example, so module 5. So in the program, I go through all kinds of seemingly odd detours to get to the point of understanding how things move within other things, right? So I go through the whole fractal thing and how things are interrelated. And then we kind of peel back for a second and we say, well, wait a minute, let's talk about price here. What is price? What is a price trend? And so you guys now know that uptrends are a series of higher highs and higher lows like this. And downtrends are a series of interconnected lower highs and lower lows. And usually the price is doing something in between one of these. It's either moving up, moving down, or trying to decide where it's going next. And as you guys know, range expansion leads to range contraction, which may be the case sometimes, like the current market right now. All right. Okay, so that's kind of what we're focused on tonight. And let me tell you guys, so a lot of you are kind of like, yeah. Let me run through the first, if I'm going to run through this material as fast as I can because I want to get trading. And trust me, I was one of those guys too. I was terrible. Once I really invested into my first big educational package, and I will never admit to you how much I spent, but I was a monster, man. I tore through that stuff as fast as I possibly could. And I didn't do any paper trading or anything like that. I went right into my live account. And let's say I was the master of a lot of stuff. I was the jack of all trades and the master of none after a while. And I had to learn how to focus on one thing. And if there's one thing that I could get you guys to focus on and kind of emphasize to you to really spend your time really getting good at, it would be single time frame price action. I trade multiple time frame price action all day, every day in many, many different markets. Usually what I'm doing is from my time, 9:30 in the morning till about 10:30, 11 o'clock or so, I'm trading futures markets. And I would say 90% of the read off of that is on a single time frame, and we'll take price action entries all the time. Oh, well, here's a lower high. If the price makes a lower low, then I just want to take myself into this short trade right here. We do that kind of stuff all the time. All the time. Okay, here's a higher low. If the price starts to hook to the upside and confirms with this higher high, then I want to be in this trade here. Or maybe I'll take a slightly aggressive entry on the long and hope that it doesn't turn into a lower high and roll over, which it does sometimes. So there's always risk and reward in everything that we do. But guys, once you learn how to trade off of a single time frame, once you start to see the waves and the ebbs and the flows in markets, you're done. You don't have to enhance your charts with all sorts of squiggles and all sorts of indicators and all kinds of funny things down there, some of which you guys have probably already paid for. And you don't need to do that because everything is a derivative of price and volume. Everything is. If you can learn how to read price to begin with, you're done. You'll never need to learn another method for any other market that you trade. They're all the same. You'll notice that sometimes I use examples from the S&P, or I'll use a Forex market example, because to me it doesn't matter. Yeah, I try to use as many crypto examples as I can in here, and tonight will be mostly on crypto examples as well too. But it really doesn't matter. It's price. Price is price is price. And I hope that at some point you're saying that to somebody else down the road. My hope is that you learn this, you kind of get up to speed on it, and they pass this down to whatever people in your family that you can, and you create a dynasty. You're the linchpin, the ringleader. All right. We got to put this one to bed first before we start moving on to topics. So I know, because I was one of you, and I was just as bad, if not worse than anybody, right? Like, hey, can we move on like 15 chapters? No. Slow down, right? I was really bad. But so I'm saying slow down now. So what is the expression? Don't do as I do, do as I say. So it took me several years to correctly put together multiple time frames. It really did. I got really confused until I figured it out, and hopefully I'm making it simpler for you. I will help you shortcut the process of multiple time frames. It won't happen overnight. So don't try to rush it. It will come. It will come, and I'll help you. Next week, we'll start working on multiple time frames. So next Tuesday night, multiple time frames. Here we come. Tonight, single time frame. It all starts with you being able to read price trends and know what would have to happen in the future for the price trend to reverse. We're not predicting the future. What we're doing is we're boxing it in. We're painting it into a corner and forcing it to decide right in front of us. So there are 4 main applications that you're going to see on every time frame. So these are the examples that we're going to go over tonight. Uptrend continuation. So an uptrend continuation means we have an uptrend, and at some point it's going to pull back. What would have to happen for this to continue to be an uptrend? And so we'll walk through that. We'll frame it in and make sure that it does earn the right to continue to be an uptrend. Downtrend continuation is exactly the opposite. It's exactly what you think would be, is that during a downtrend, we shall see moves to the downside. They're going to pull up and everybody's going to go, oh, here we go. Here comes the uptrend. This is it. Here comes the rally that we've been waiting for. But what happens is down she goes again. What would have to happen to confirm that downtrend to keep it going again? Or what would have to happen to get it to reverse? Okay. Uptrend reversing to a downtrend. Self-explanatory. And then the opposite of that, downtrend reversing to an uptrend. What we're hoping for, isn't it? Okay. Are there any questions before I get motoring in here? Anything that anybody, just on a procedural basis, or just a general overall question? Now, there is like a 20 to 25 second delay from when I yap something out to when you're actually hearing it, or when I do something visual here and you see it. So that's the time it takes for YouTube to stream all this and compress it and shove it down a pipe so that you can see it. So I'll, when I ask for questions, I'll kind of dawdle and drag my feet for a minute to give you time to respond. But if there is nothing seen, I will get into the very first example here, which is an uptrend continuation. So here we go. I'm going to just jump over to a chart, and I'm going to just start with our old friend Bitcoin. And I'm going to go back in time to, let's see here. Sometime around this would be good. So right now what we have is kind of an ugly looking uptrend, but it nevertheless is an uptrend right now. On the daily chart, what you're seeing is higher highs and higher lows. Now, what we have to do is we have to start attacking this systematically. Okay, so Ann is asking, so I do have a couple of questions that came into the room here. Ann is asking, are you going to go into more detail on the last two items? We will give them equal time today. So we're going to do uptrend continuation, downtrend continuation, uptrend to a downtrend, and downtrend to an uptrend. And actually, we can even make it harder and do this on smaller time frames. Smaller time frames. And Sean is asking, is it possible, of course it's possible, to reasonably work on a time frame lower than 4 hours? Yes, it is, Sean. But the one thing that I would say is, one thing that's kind of missing from today's market is the volume. So if you look at trying to work with today's market less than 4 hours, you're going to get a lot of noise. If you haven't noticed, the volatility is, the oxygen has just been completely sucked out of the room in the crypto market over the last week or two here. And it's just quivering. Somebody poke it to see if it's still alive right now. Quick. And so right now you're going to see a lot of noise on the intraday chart. So don't spend too much time. Although you can, on a 4-hour chart, you can actually go back on TradingView. You can go back a year or two. It's amazing. You can drag that thing all the way back there. So if you want to see some high volume, high volatility work with an intraday chart, you can certainly drag it back to the end of 17 or early 18 to do that. Okay, welcome aboard, everybody. Grant, you made it. Outstanding. Grant and I had to work all day long to get him logged into this course here today. So, for anybody wondering if this is recorded, actually, this is a good time to bring this up here, just on a procedural basis. Okay, I'm going to unsize this chart because what I want to do is I want to drag over. Let's see, I'm going to drag over the master class. I'm going to drag this over so we can look at this for a second. So this is actually what you're watching right now. This is actually what you're watching right now. This is the coaching page. And so once we're done tonight, this will turn into a video. I don't have to do anything. It's just automatically right there. And you'll be able to enlarge it. You'll be able to watch it at length and do all that stuff. So it's really cool. I really like this technology. I think this is way, way better than some of the old GoToWebinar stuff that we were doing before. You know, which is good in its own right. It was terrific, but this is so much better. It's just so much more interactive, and I like the fact that you guys can all talk to each other too and help each other through this. So yeah, we are just starting. If you just stumbled into the room here, we are just starting. I just sort of read the riot act to everybody tonight and said, hey, we're going to be focusing on one time frame. So again, all of these sessions, this is all you got to do is just show up on this page, the coaching archive. So next Tuesday, just show up on the page again, click on the play at the right time, and just like magic, I'll show up again. And if you can't make it, no problem. If you know you can't make it to one of the sessions, so next week, if you know that you can't make it to next week's session, so we're going to do that next Tuesday, 2 p.m. Eastern Time, which is 1800 UTC on Tuesday. So figure out what time that is in your world. Send me a question that relates to, send me a question. No, we don't want to look at that. Why are we looking at that? Okay, hold on a second here. We're looking at the wrong page. we are looking at the wrong page. So let's see if we can get this back again. There we go. Sorry about that, guys. So I don't know how far back we were with that, but yeah, if you have a question for next week, that relates to multiple timeframes, get it in as soon as you can, and I'll add it to the capture. And then I do actually have a couple of that are archived for tonight. So I better get going here. And let's see if we've answered everything. Okay. Okay, I think we're good to go. All right, so this is what I want you guys to do. So we're gonna dive right in here, and I'll look back at the room for questions later on. What I'm going to be doing here is let's go ahead and use these trend lines, and I'm going to have a red one that represents the upper trend line, or I should say the prior swing high, and the lower one here is going to be the prior swing low. So here's the prior swing high, here's the prior swing low. I'm going to call this one the green. Okay, everybody with me? Here is the former prior swing low. Here is the former prior swing high. We now have higher highs and higher lows. And so what we're going to do is we're kind of walk along here. For the uptrend to continue, this prior swing high has got to be punched through. And this is what I want you guys to do. I want you guys to spend the time doing this. I want you to use the hard right edge to train your eye how to frame in the price action. So a lot of people have said, well, how do you know which one is the high and which one is the low? Do iterations, repetitions, my friends, repetitions. Aha, the price has just broken through the prior swing high. So now what we get to do is let's pull this along. Let's pull this along, and now we have, boy, we got a whole bunch of new highs, don't we? All right, so we're going to drag this guy up here. That's our new prior swing high. This is our new prior swing low. In fact, we might be able to bring it up to about 641 here. Is it possible to zoom into the candles that we're looking at? There we go. How's that? Okay, so here is prior swing low. Here's prior swing high. In fact, let's even do this. Okay, so we can clean things up and we can make it even more bigger. There we go. That's about as big as I can make it. Okay, so I mean, this is what you do, guys. This is what we're doing. We have an uptrend, and so what we're looking at is to confirm the uptrend. So now we have a little bit of a different swing high. Now this might be a swing low down here, right? This might be a higher low. This might be a higher low. Let's see what happens here. Okay, I would say that is our swing low. That's our swing low now. So we're just going to keep on dragging this up. Now, for this to reverse, and we'll get to this a little later, for this to reverse, this is what you always have to be asking yourself. If the price puts in a lower high here and then plunges through and makes a new lower low, then don't we have a change in polarity to the downside? Yes, we do. So I don't know what's happening on the right side of the chart here. I do not know what's happening on the right side of the chart. So this is the game that you have to play. You have to move this along. Okay, so let's keep moving this guy along here, and let's see what happens. We're still in an uptrend, so we would expect to see higher highs and higher lows from here. So now we have a new high, and guess what? We have a new low. We now have a higher low, don't we? And we now have a higher high. This is what an uptrend does. It's not magic. This is just simple stuff here, guys. Simple stuff. Guess what? We have a new high. And don't we have a new low? What would our new low be? I would say it's probably going to be about 720. There's our higher low. We're going to continue just working this across. There's no magic going on here. No monkey business. This is just a strong trend. And so when you get these persistent strong trends that are just eating it to the upside, right? Just smoking it to the upside. This is what we're kind of waiting for to come back into the market, aren't we? All right. Now what's going on? Can anybody tell me, and I know I'm going to have to give it a few seconds here for the time to come, but can anybody tell me what we're starting to see? What are we starting to see here? And what comments do you have on the price action that we're seeing here? So the price just completely blew out to the upside, didn't it? What are we starting to see here? And because of that, what is my expectation for the price? Well, yeah, Ocean, we are seeing an uptrend. There's no doubt of that, but it's not just any uptrend, right? Daryl has got it nailed. It's a parabolic move to the upside. Okay. Brandon's saying it's a parabolic tail. That is correct. Let's go ahead. Let's see. I think I can actually make this slightly even bigger. I'm going to go ahead and change that now. This is normally, if you guys go through the rest of the course, which you'll talk about is you'll see the S-shaped curve of many different rallies where they go like that. And whenever you see a market going absolutely berserk, nearly vertical, almost an infinite slope to the upside, you should become very, very cautious. Now, Bryce is correct. We are seeing volume. There is something driving this. It is volume. Okay. But it's gone exponential, and exponential is not sustainable. So this is not bad, but this is where everybody is going, ooh, look at this, ooh. And they're chasing this. This is a FOMO move. This is where the new retail traders will jump on board this thing. This is where they will chase it. Okay? So you, being the savvy individual that you are just dragging up your price to this and saying, whoop, okay, we have higher highs and higher lows, but my God, is that a parabolic uptrend? Okay? What could we expect from a parabolic uptrend? Not that I want to jump forward on this. How does one candle show that? We've got 1, 2, 3 candles. Notice the slope of what was happening before. All right, this is where your eye, if you put a ruler on this, price action here, this is pretty much what you'd see, right? It's just kind of going in a very linear trend, and all of a sudden, something happened here. We have volume, and all of a sudden, this thing blows up big time. It goes from 800 up to 920 in the blink of an eye. Something changed, okay? So what will happen is this will drive exhaustion. And so you, being the savvy trader that you are, now are going to start to think, okay, I bet you we're going to pay the piper for this. We may go from range expansion to range contraction, right? We may even, and look at this, it just keeps on going. So now what do we have here? We have higher highs and we have definitely higher lows. Just keeps on going. Look at this thing. Uh-oh. Now we got a problem here, don't we? We got a problem. This is where our market will get unstable. Okay? So our exercise number 1 here was for continuation. All of a sudden we have plunged through. In 3 days, we have lost all of our lows. So all of these recent lows that we, I would probably have moved this thing up to here as far. So we've gone from a higher high to a lower low all of a sudden. which is a warning signal. But if you don't understand multiple time frames, which again is next week's class, this is more than likely just a larger time frame pullback. Yeah, Sean, that is correct. A parabolic move to the upside like this will use up a tremendous amount of energy. Imagine if you were going to summit a mountain. Oh, by the way, have you guys seen that movie? It's a documentary about that guy that did a free climb on that mountain in Yosemite. Oh, that I think that's coming out this weekend. I can't wait to see that. It's amazing. Anyway, when we see something like this happen, you're not going to be able to sprint up the side of a mountain. You're not going to be able to sprint up the side of a mountain without gasping for air at the top. And this is typically what happens is you tumble down the other side. Might this be manipulation? I doubt it. This is usually FOMO. This is usually all of a sudden, look, manipulation does not come with this kind of volume. This is somebody saw something that said, oh, I like this. And oh, by the way, this is 2017 coming along, and all of a sudden everybody all of a sudden said, hey, crypto is where it's at, right? But these types of moves are unsustainable. They're unsustainable, and this is why we have a hairy back on the backside. Let's see. Please drag your chart screen a little lower. Well, okay. Okay, we'll drag it a little lower here. So CC is asking, would it be fair to say you want to exit the trade on the first parabolic move you see, or perhaps would you incorporate a trailing stop? That all depends on what type of investor you are. That all depends on what type of investor. If you're a swing trader, yeah, you want to capture as many profits as possible on the swing up and you want to sell into strength. If you're a longer term hold, you just want to go away and ignore it. So in between those two, or you can be scalping moves intraday and inside of this. But there's no one answer to that for everybody out there. It depends on your time frame, depends on your purpose in life. Okay, so onward. So now what do we have? We have an uptrend actually transitioning into a downtrend. But we do have a larger time frame uptrend, don't we? We do. Okay, so look at this. We have a downtrend. Look at that. Lower highs and lower lows. So now all of a sudden, there's our box here. Okay, there's our high, there's our low. Here's the next low down here. Okay, here's our, let's move that high to there. This is our current box. So now we have a daily downtrend because we have lower highs and lower lows. Guess what, folks? And again, I don't want to jump forward too far, but this is just a weekly pullback. This is how the time frames work together. This is a weekly chart pullback. So while everybody else is panicking out there, you're like, well, it makes total sense. Exhaustion, weekly chart pullback, consolidation, the trend should resume. So how would I know when the trend is going to resume? Well, when the daily chart starts making higher highs and higher lows, right? And we start poking its head above there. All of a sudden, are we doing that? Maybe. Let's see if we print a higher low here to go along with that. Well, there we go. We have now changed polarity back to an uptrend. It doesn't seem like it, but there you go. There's what a hard, sharp pullback looks like at a larger time frame, and now the same trend resumes. And there she goes again. And off she goes. Everybody got shaken out back here. Everybody got convinced that it was all over. Look at the volume coming in. This is people panic selling. People that bought in here at 1,000 or 1,100, all of a sudden are panic selling out down here at 800. It happens every day. It happens in every instrument. It happened 100 years ago. It will happen 100 years from now. The same things that happen in financial markets will happen in perpetuity, forever, as long as human nature is involved. That's why it's really helpful to understand how herds make decisions. So this is example number one, and I'm going to pick up the pace here a little bit, but this is an uptrend continuation. An uptrend continuation. All right, so now what I'm going to do is going to move this along a little bit here, and we're going to go into a downtrend continuation. A downtrend continuation. So let me find a good example here. Okay, so we've got a downtrend in play, right? There's a downtrend in play. Let's make sure you can see as much of it as possible. Think you guys can do that? Let's see. Raj, how would you re-enter if it goes up again? When it goes into a primary uptrend again, right? If you want to make your stop the change in polarity to a downtrend, then you can make your re-entry the change in polarity to an uptrend again. Okay, so here we have a downtrend. Here we have a downtrend. And if that's unclear, let me know at the end of today's session and I'll spend a couple of minutes on that. But I want to get through these 4 examples and then I'll start to take some more individual questions here. So what do we have? We have a downtrend. And let's go ahead and let's get our little red trend lines. So let's make the green one down here. There's our, and I know this is tough to see. Maybe what I should do is, now let's not worry about it. Okay, and let's draw a red one in here. Okay, so we have a red trend line and we have a green trend line representing the highs and lows of the current. This is the prior swing high, and here's the current swing low. And so I'm going to have to move these along. Okay, so here's the swing high, and here's the swing low in the green. Okay, so we're going to move that along. Sorry for all the trend lines here. The other thing that you can do, remember this is a downtrend continuation. One thing that you can do is you can also watch your trend lines for these kind of trend lines, right? So when these kind of trend lines get broken, so let's set this one to like, let's do pink here on this one, okay? So descending patterns break to the upside. So all of a sudden we get a little early warning that maybe this one is starting to go here, don't we? And then boom. Now we have a transition to an uptrend, don't we? We now have a higher low, higher high. We have the daily chart starting to trend higher. We have the daily chart starting to trend higher. Now, and I would almost bring this one up here as well too. So we have a fairly tight range. We have a fairly tight range. And let me get some of these trend lines out of here for you guys so you can see a little bit better. Let's get some of these out of here. There we go. Almost done. Okay, so we're making higher highs and higher lows now. Now what we can also do is we can look at, that's a schnauzer, by the way, if you guys are curious, if you can hear that. We have a little bit of an uptrend here, don't we? Have a little bit of an uptrend. So if that gets broken, all of a sudden we might want to start looking to see if our lows are going to get punched. Okay, so now we've taken out the prior swing low. That's a warning, isn't it? Is it a full change to a downtrend? Not exactly, but it's the beginning of one. So now what we're going to do is we're going to look for our swing high. And in fact, let me zoom in on here so you can see this a little bit better. Okay, so we're in a primary downtrend. We're in a weekly downtrend. We're seeing a little bit of a trend up again. We're seeing higher highs and higher lows. But all of a sudden, we punch through to a lower low. And I'm thinking that if this uptrend is going to continue, it's got to go through 10,000, doesn't it? It's got to go through this red line here. If it prints a lower high, then it's all over, and there it goes. And there goes the downtrend again. There's the continuation of the downtrend right there. So downtrend, counter trend move, continuation. This is exactly the opposite of what we just saw a couple of minutes ago. It looks different though because the character's different. That is, Daryl's absolutely correct. This is a lower high in the weekly chart. So if you guys were to overlay a weekly chart against this, you would see a swing down here, you'd see a swing back up again, and then you'd see a continuation of the downtrend like that. It looks like one of these samurai movies, doesn't it? This art here. Okay, so correct. All right, so let's go to the next example. I want to save a few minutes here for questions. Let's move to an uptrend, moving to a downtrend. And boy, do I know a good example of this one. All right, so let's just kind of walk through this one here. This is the recent one that we had back in December. Got some big candles here. And I'm not going to walk my trend lines through this. I'm going to wait until things start to erode. Now, there we go. We've got that parabolic move. Look at this. These are daily candles moving from 11,500, moving 2,000 points a day. Here's a daily candle moving from 13,500 to 16,500, 3,000 points a day. Look at this craziness, right? We're still making higher highs and higher lows. This is still a higher low now at 12,700. Still a higher low. And it's still working higher, isn't it? So let's go ahead and let's get these trend lines in here now. Let's go for, there's our green one. Okay, so there's our green. That signifies the swing low right there. And the swing high is, let's get that in here. Swing high is up here. I love how you guys are helping each other. I think this is great because if you're able to help each other, that means that I'm able to kind of stay on focus here because not everybody wants to hear me answer questions. That's one thing I learned. Okay, so now we're still moving. All right, let's move our swing high and let's move our swing low. Still moving. Isn't that amazing? All right, so our swing low is now down at 15,500. Swing high, based on this candle, is almost at 20,000. And there we go. We're almost there. Pretty big range, isn't it? Hard to manage risk when the range is this bloody big. Okay, we've very definitely got a swing low at 15,005. We've got a swing high just shy of 20,000. So now what we want to do is we want to see if it's possible to print a higher low here. Is that going to be our higher low? And all of a sudden, boom, we come down and retest the low again, don't we, at 15,005. And we undercut the low at 15,005. This is the beginning of the end. And that should be a warning signal to everybody. And trust me, if you were able to execute a stop at 15,600, you'd be patting yourself on the back right this second. Even though you gave up 5,000 points, you'd still be patting yourself on the back. Your objective is to get the meat of the move. You will never get the top tick here. Get that out of your mind that you will get the top tick of any move. Okay? So right now, anybody holding this long would more than likely be stopped out or should be seriously considering selling out at this point. And this is only after 4 days. after one of the strongest rallies in anything you'll ever see. Okay. Why wasn't 11,500 been our higher high to beat? 11,500. That was way down there. So we want to make decisions off the lows at this point. We don't care about the highs right now. If we're working with an uptrend, we want to keep moving the lows up. That's what we want to manage on, is the lows. And what I'm looking at, guys, this is what I'm looking at, is the structure here. And sometimes, you know, you can also play this game too. You can come over here and add indicators, and you can add what's called the zigzag onto here. And so sometimes if you guys can't see these swings, you can add the zigzag onto here. And let's go ahead and let's format the zigzag. So let's try bringing this in half here. Let's see if we can get, so you can add a zigzag to this. Notice how the zigzag is showing the higher highs and higher lows. Now I could even move this a little bit differently. I can move this down so it would catch this pivot as well too. But this isn't bad. This isn't bad. So just play around with the zigzag. If you have difficulty finding the highs and the lows, the prior swing high, prior swing low. But the way I would read this is pretty much as this thing shows, like this. This is the step that they're missing and that I got. So right now, this is my prior swing low. That is the important level that I want to manage off of right now. Okay, so this is an uptrend. This is starting to transition to a downtrend. Now we could go through the whole confirmation process here. So it needs to put in a lower high and then a lower low. And right now we're just sort of shaking, baking around. This is a higher low. Here comes a higher high. This is also, remember what I talked about when we say that reversals start from the inside out and they transition or they propagate higher. This is what it looks like on the weekly chart. Like this, and then she rolls over. So this is the lower high in the weekly chart. So this will shake and bake people out. This will fake people out because they're not aware of what this is. That's the weekly chart doing its job to transition into a lower high. Tops are a process. They go it's a very tough transition for a top. Okay, so let's go to our last example here, which is a downtrend moving to an uptrend. And to do that, actually, I'm going to go to a slightly different coin here. See if I can find the one here. And this is a fun little guy that we just found. Somebody brought this to my attention. If you guys don't mind, I'm going to get rid of the swing tool or the zigzag. Going to get rid of that guy. Okay. So what we have here is, there's our downtrend. There's our downtrend, downtrend, downtrend. And what I want to look for is a downtrend moving to an uptrend. And we're starting to see a lot of these in some of these little stealth coins that nobody has heard of before. So here's the downtrend, and we've got a nice trend line. And notice what's happening now. And I'm going to do this one rather fast because this is going to use the same process as the other ones. So far, what we're printing is lower highs and lower lows all the way along here. Lower high, okay? We're just kind of working down here. Lower highs, lower lows. Each one, this is a lower high than this high, isn't it? It's a lower high. And so far, this is a higher low. It's not a lower low yet. So we don't know what's going to happen yet here. Okay, let's get that out of there. And then all of a sudden what we do is we print a higher high, and that makes this a higher low. So there is a daily reversal right there. Now, somebody was giving me a hard time the other day saying, hey, how did we find this and you didn't find it? Well, it's because this was still well below the 200-day moving average. And so it's below my noise floor, so I didn't see it. Okay, but this is where we're starting to get into higher highs and higher lows, right? So a lot of these have done similar moves to this. Like we've had XLM has done this. We were in a former downtrend. This one is not a great example because this is still, ooh, stop that. This is still a, there we go. This is still a lower high on the weekly chart. So you can see this on the weekly chart. It's still a lower high, but nice little uptrend here. We're starting to see these on, let's see, where is XRP, Ripple Dollar. Okay. This is still a lower high setting up in the weekly chart, but on the daily chart, we could actually perhaps make a swing on here. So actually somebody was asking me, like, how do we read this one? How do we read Ripple versus the US dollar right now? And I'm going to check the chat room to see if anybody has any answers to how we would read this. How would we read this? So here we have a chart. So let's kind of walk through this one. We have a chart putting in lower highs and lower lows, right? And then all of a sudden it just busts a move, right? We do the old MC Hammer move here. It just goes completely FOMO up to a higher high. Is that an uptrend by itself? Well, it's the beginning of an uptrend. Chances are pretty good that this is going to put in a higher low, and that's what it does. So here is the higher low, at least to begin with. So here's a higher high. Those are my grade school letters. Higher high and higher low there. So what happens now? Now it goes up to a lower high. So is that a downtrend? No, not necessarily. Because what you have so far is what? You have another higher low. So this is a condition. Guess what, guys? This is range expansion moving to range contraction. What do you have? You have this thing vectoring in like a big triangle, don't you? This is trendless right now. This is trendless. There is no trend right now. Now, what would have to happen for, so here's quiz time. What would have to happen for this chart to transition to an uptrend? Let's get our little trend lines out here and let's start marking these guys. Okay, so we're going to mark this one as the swing high. Yes? Is that our swing high? That's the most recent swing high. That's the prior swing high right now. It's a lower high. And let's mark our current swing low. Our current swing low is all the way down here. That's our swing low. Swing low, swing high. We have a very, very large frame right now. We have a very large framing box for this. Even though it's only a matter of about 20 cents, but still on a percentage basis, it's very large when you consider the actual price of this coin. Now, the long wicks, I don't care about the long wicks right now. The long wicks just means that there's a huge amount of disagreement from the price. So it got ramped up and then the shorts came in and pushed it down. And so it's just a big range, right? So for this to turn into an uptrend, what do we have to do? For this to turn into an uptrend, and I'll make this green so we can follow along. So for this to turn into an uptrend, one of two things have to happen. Either this blows right up through the prior swing high, which is unlikely. It's not really a bull flag. Not really a bull flag. A bull flag is something which is more like it's a much tighter pattern. This is a horribly fractured pattern. This is much more of a pennant or triangle. So either it has to make a higher high, or it has to make a lower high, higher low, higher high. It has to change gears midstream like this. That's what will get Ripple back into an uptrend. Ripple can also fall into a downtrend as well, can't it? And all it needs to do is to punch through this level. That's it. That's all it would take, because then you've got a lower high and then a lower low. I got all kinds of dogs around here. Yeah, it's a descending triangle. Yeah, I don't disagree with that. It is a little bit more of a descending triangle. Descending triangle is typically where you have equal lows and a series of lower highs like that. Okay. So we've gone through, so that's our example on Ripple. Let me do a quick one on, let's see, I had two other requests here. So one of them was XLM USD. So let's do that one. And it's really got kind of the same look to it, doesn't it? Right? Now you can kind of see where things are going, right? So let's do the same thing here. What's our lower high? Where's our current swing high? Current swing high is right here, isn't it? It's right there. And I'm going to make that red. And the current swing low is right here. So this is our current frame right now. And let's call that one green. There we go. There's our box. So what has to happen for this to turn into an uptrend again? Or to reclaim the uptrend, let's call it that way. What's going to have to happen is either the price has to punch out through here, or it has to go through some kind of combination of lower high, higher low, and then off she goes. That's what has to happen. Now, what has to happen for this to go back into a downtrend? We've already got a lower high, don't we? All it has to do is to fall through this line. And now we have lower highs, lower lows. Okay, let's see. The other one that was asked was Link. So I'm going to look at Chain Link. Ocean, do I avoid using the extreme volume candles as swing highs and lows? Nope. Nope. I use everything. It's kind of like the sawmill that uses the sawdust and sells the sawdust to somebody else. So let's go into Link BTC Chain Link. I use everything. This is another, so we're getting a lot of these that are just kind of ugly, aren't they? Because everybody went FOMO. Everybody said, let's go, let's chase after this thing. And then all of a sudden they're all just, and not happy a couple weeks later. This is why you don't chase after moves like this. This is why you wait for the consolidation, wait for the trade to come to you. You've heard me say this before. It takes a while to learn the patience for this though. Okay, so this one is just, this is almost impossible to read right now because you've got lower lows and you've got higher highs. And so you've almost got a broadening pattern here. So it's kind of odd. You're seeing the highs increasing, but you're seeing the lows increasing as well too. So this is what's known as a megaphone or a broadening pattern. So there is no trend here right now. Ann is asking, would the choppiness index be good to add now? Yes, but we're not going to do it in session 1. We're not even going to do it in session 2 unless you're really, really nice to me, right? So I'm trying to get the price action stuff down before we complicate things and add the chop index, because that's what we all want to do. We all want to complicate things, right? We all want to lean upon our indicators. We all want to get away from price. We want to get away from those things that are fundamental. We want to add different colors to our bars. We want to add different indicators. We want to add more junk to it, don't we? And I'm trying to get you guys to strip it down. Strip it down. Understand how to read the price at one time frame. Understand that. Keep working through hard right edge until you start to understand. It's really actually a very simple process that we try to complicate again and again. Okay, let's see. We got just a couple of minutes left. Are there any questions that you guys want to bring up, or anything related to price action that we want to talk about here, so I can get you guys out of here on time? Sean, I'll go as late as you guys want to. I'm not going to just turn this thing off at the top of the hour, but I don't want people to feel that we're going to be around here for 2 hours, right? Okay, so Quark chain. I don't know about Quark chain. Let's see. I don't even know what the symbol is for Quark chain. Oh, there we are. We found it. We got lucky. Okay, so let's look at Tony's coin. This is Quark chain. Boy, is this just a big rounded. So what do you think the trend is there, Tony? You have an uptrend, sir. You have an uptrend. So right now, enjoy yourself. You found one of the few coins out there in an uptrend. Let's see, Raj. Does a trader need to be exceptional in mathematics? I was terrible in mathematics. I'm more of a visual than I am in math. Look, if seriously, guys in trading, there are the real quant geeks that are out there as far as math. I am not a math trader. Like when you get into derivatives and probabilities and the standard deviations and probability analysis and stuff like that, that's where the math will take over. There are option traders that are out there that do not trade off of a chart. In fact, they make fun of charts. They believe that charts belong at the bottom of the ocean as well as the other sunken ships out there. And so there are ways to trade. Unfortunately, right now we don't have the derivatives nor the statistics or the derivatives to drive the statistics for those. So if you're a math geek, that's coming. It's coming down the road. You might be able to start to kick the tires and dare a bit right now. Sean, how often do I use the candlestick tails as the swing highs and lows? Fairly often. I will use as much of the candlestick as I have to connect the dots. Okay, so Bryce wants to look at Trex. Let's look at Trex really quick here. All right, and I'm going to do this one on the USD. Hopefully that's all right. So this is kind of interesting because here is Trex, Tron. Keep thinking of wooden decks. And here's a former downtrend that is moving to very, very imperceptibly. This has just now happened. We've moved from a higher low to a higher high. This is the first indication of a change in polarity to an uptrend. So good catch. So, and I will use charts paired with a USD if they're offered by a broker that allows me to trade them. The USD generally is more stable than Bitcoin. or has been more stable than Bitcoin in the past. Bitcoin now has turned into a stable coin over the last 2 weeks, but it's not going to stay that way. So I will use the USD when I can because it's more stable and it makes it easier. It makes the numerator more important. But if it's a pair that I can only trade with Bitcoin, then I will use that pair. Okay, so Andrel, I'm such a noob in trading. Can you point to the chart some entry point and exit points with the system? All right. So we really haven't talked about entry and exit points today, have we? We haven't talked about entry and exit points yet. We're just talking about understanding the trend. So I want you guys to crawl before you walk, before you run. So everybody wants to run right into trading, right? Everybody wants to run right into, you know, hey, enough of that crap. Just show me where to enter, right? Everybody wants to. I was just as bad that way. But on a trade like this, like, and this is not the best example. Let's go back to a little bit of an uptrend here. So here was one swing that we took in Bitcoin. So just to show you an example of something to put this into play, here's a swing that we took in the summer. Downtrend, downtrend, downtrend. And then what happened here was we had equal high, higher low, and then we entered long right over here as the higher low got printed. And then boom, it turned into a higher high. So we took that swing long. Do you see that? Do you see that? Once the higher low is printed, then it starts the process to an uptrend. And it's not going to make any sense to you until you spend some time understanding that downtrends are a series of lower highs, lower lows like this. And to get this to reverse, I need to see it print a higher low and a higher high and do something like that. So I see these in my sleep now because I've seen these over the past 15 years. I've seen these moves, higher lows, higher highs, those kind of things, right? It just gets imprinted into your brain. And this is what you need to do, is you need to understand that descending patterns will break to the upside at some point, will normally feature this higher low in here, right? We don't need an indicator. We don't need to color our candles differently to do anything like that. We can just look for the higher low, higher high. There's our entry right there. Okay, so let's drag this along. See, there's the higher low. Here's the higher high. We could have entered also over here as the higher high confirmed at 6,800. So I can make this a little bit bigger if you guys want. So that would be an entry right there. Here's the more aggressive entry down here at 6,400. The more conservative entry is the price breaking through 6,800, and off she goes. And that's it. That's what you want to look for. Yeah, Ocean, right now, BTC, like in my report from tonight, it's just not moving. BTC is just absolutely, I have never seen it this quiet. I mean, look at this thing. It's just into an apex. It's stopped moving. Somebody poke it. Somebody poke it to see if it's still alive right now, because it's like a whale that's been washed up on the shore. And everybody's afraid to get near it because they're not sure if it's alive or not, or if they need to strap dynamite to it. But and yes, if we look at BTC, BTC is still in. It's actually gone trendless more than anything else. But if you look at the weekly charts are still putting in lower highs, lower lows. Just that we've lost all volatility lately. Guess what, guys? Range contraction like this leads to range expansion. This will generate a big move, one way or the other. This is why you frame in the price to understand which way it's going. Okay, Let's see. How close does the higher high need to be? 1 point to 5 point? It just needs to be a higher high. Okay, so his question was, Ocean Splash's question. I don't need to assume gender there. My God, I'm going to get myself into trouble these days. But so here's the question. So here's the higher high, and let's drag a price level over here. Okay. So for the confirmed change in polarity to an uptrend, all I need to do is to have the price break above this level here, which is the high is 68.1472. When reading the price, do you ever consider the volume? Only if it's a bottoming. Look at all these moves here. Do we look at the volume? No, they're all just, you know, it's nice to have a little bit of volume on a breakout. This is why, though, when I looked at Ethereum, when Ethereum was bottoming recently, this is good. This is really good. I like to see that. That means something to me, especially with the hammer candlestick that we talked about in the Ready Set live session today, or the trade school. Bottoming volume, this is really good. I wish it would go somewhere, but this is the sort of thing. So when you incorporate this with a price action, then it means it's got that much more oomph to it, right? So yeah, Ocean, what I will typically do, let's go back to Bitcoin. Let's go back to Bitcoin. So what I will typically do, Ocean, is I will, and this also goes back to who was asking the question before. Who was doing, let's see, Andrel. Andrel was saying, you know, how do you know? What do you do? Well, what I do is I say, well, look, if the price drives above here, I will right click and say, add an alert. Add me an alert, and I will write myself a note to say, go long BTC right now. And I'll forget about it. And all of a sudden, boom, up shows an email, or you can even send it to your mobile phone, and it will text you when it breaks out through that line. So that you don't have to guess. It will tell you when it does that. Okay, so I'm not going to do that, but this is typically what I will do, is I'll set price alerts. And that I'll show you that in the program as you go through it. Sean, so how much impact does the volume have on the price? Okay, that's a great question, because it depends on who you listen to. You can hear people that say, when you see rallies happen on little volume, they'll say, oh, you're setting yourself up. Oh, wait a minute. What did I do here? Am I still good? Yeah, I'm still good. No, I'm not. Hold on a second here. I think I hit the wrong button. Yeah, I think I'm back now. Yeah, that's my Spotify. That's my Spotify. I think it will, it's gonna redraw here in a second. Grant is asking about, yeah. Grant is asking about, okay, so we're all good now. Yeah, it takes a long time to, there we go. Takes a long time to redraw these things. So if I get too itchy with my fingers, I hit the wrong thing. Okay, so volume. Let's get back to volume here. You can have rallies happen on very low volume, and you'll hear people say that, oh, when you have a rally on low volume, look, I've seen markets rally on low volume for the last 10 years, and it didn't seem to matter. Reversals happen on big volume, though. Remember that. Reversals happen on big volume. Look at the reversals that happen here. Reversal, boom. even though it didn't last for very long, reversals happen on big volume. Big volume, big volume, big reversal there. Look at these. Reversals happen on big volume. Now we're kind of dying on the volume here, but you guys get the point, is that the reversals will always happen on the bigger volume. So right now the volume's just tailing away. The volume is tailing away. But again, this is what makes that reversal in Ethereum so important. The one that we had a couple weeks ago is that it came on big time volume. Big volume. There's a big volume on this reversal here. It didn't go too far. It was just bear flag. And so far, this is just another bear flag, but big volume here, and that is good. It's a good sign. Grant, does this class come with any charting subscriptions? If not, what site do you recommend? TradingView. TradingView.com. You can get a free subscription to there. You can get most of what you need. It's just that you can't run with more than a couple of chart studies on here. You can't have more than maybe one watch list, those kind of things. But you can do pretty much everything you need to do with a free subscription to TradingView. If you start to get more and more into this, you will probably want to go with a pro version. Okay, let's see if there's any, thanks for enduring my fumble fingers here. Let's see. You guys were reading about my chill tracks and my drift away peaceful guitar and yeah, not too much time to listen to music anymore. Okay, so let's take a couple more questions. I'm getting silly here, so it means it's getting late. Let's see. Okay. So you got, let's see. Sean, from your experience, how much influence do the fundamentals have on the price discovery? Great question, Sean. Man, you're full of them tonight. Thank you very much. Here's my read on fundamentals. The longer the time that you intend to hold the coin, the more the fundamentals count. The shorter the time frame that you hold a coin, the less that matters. So if you're holding something for a week, maybe even a month, it really doesn't matter. You can ignore the fundamentals because it's all just price discovery. But fundamentals over time do matter. So there's always this sort of, war between those that feel that fundamentals are overblown and those that feel technicals are everything. I think the true answer is somewhere in between. It really depends on the amount of time that you intend to hold something. So that's a really good one. TradingView free doesn't allow multiple charts. Yeah, so I don't know. I mean, I don't know if you could do this for free. If you set up like the triple fractal, if you can set that up on the free. So that is something I would want to see. It's relatively inexpensive though. TradingView, the subscription product is relatively inexpensive. I think it's somewhere, if you pay annually, it's somewhere maybe $15 a month or something. And it's, for what I do, that's just the cost of doing business. And then also what you can do is you can full screen, you can detach these things, you can do all kinds of stuff with it, right? So let's just go back to single screen. So we could, guys, what I do with a newsletter is I do what's called trade school. So during the afternoon, I will do what's called a trade school. I work with people in the Discord room and I say, what do you guys want me to do? And they say, do a session on XYZ, and that's what I'll do. So there's lots of things that we're doing during the day as well too. No triple fractal even on the Pro? Well, how am I getting that then? How on earth, how did I get lucky and get that? Well, that's odd. Okay, let's see. Explain the triple fractal chart. So this is what I'm doing here is I'm clicking on this area up here. And maybe I'd have to see what my subscription is, but I don't think it's anything special. And then you can set, like if you want to. Oh, look at this. So there is a level that I can't get to. I'm currently with a Pro Plus plan, which supports up to 4 charts per layout. To view up to 8 charts, you'll need a premium plan. There we go. So I found the delineation. So I don't know if I'll say no thanks. Don't need that. So I can do up to 4 charts. So I can do up to 4 charts here. And you can all have these different. You can have these to be set differently. So this one can actually be like Ripple, and I can have this one set for Dash, and this one I can set for Tron, those kind of things. So you can do all kinds of different things with the charts, which is fun. So Tony is asking, do I think it's a good idea to create 2 portfolios? Well, yeah, because I'll do like, here's our portfolio for the managed ReadySetCrypto fund. I've got a portfolio only for swing trades. So these are the current swing trades that I'm either managing or just watching, looking at, those kind of things. So yeah, I do keep multiple portfolios depending on what the need is. Sean, from a purely TA perspective, so for those of you that are new, TA means technical analysis, so charting. Let's go back to a single chart here before I anger anybody. Okay. What kind of things affect the price discovery? Sean, understand that everything that is known in the world right now today has already been baked into the price. So I think this is where retail traders get it wrong many, many times, is that, like somebody was asking me earlier, like, hey, how do you trade off the news? I don't. And I don't want you to trade off of the news. Normally that's what retail traders do, is they try to trade along with the news, and they get rippled, right? They get rippled. I mean, this is what happens when you trade with the news, is that something like this is going to happen. People chase after it, and a couple of days later, they're underwater because you can't trade fast enough to stay with the news. So to answer your question, what happens is everything that's known about that coin is already baked into the price right now. So it's only new information that will drive price discovery in different directions. It's usually only new information. So, that caveat comes along with if somebody wants to if a whale wants to come along and make a play on something, if it's low volatility conditions, that might also affect it. But that's not something I can plan around. And usually that doesn't affect more than just a few minutes at a time for things like that. So it always comes down to certainty and new information that was never priced in. That's what moves price every time. Certainty, if certainty comes into an asset, it normally will go up. Uncertainty will drive down the price. So right now we're watching the US stock market get hit pretty hard because interest rates are going up, and there's uncertainty around that. Uncertainty is always going to upset things and drive it down. So you can have double fractal on Pro. Okay, so guys, one thing that I will say about, and maybe I just was an early adopter or something, one thing that I will say about the fractals is that you don't need a whole bunch of time frames. I would start with 2. And I'm kind of jumping forward to next week's topic, but I would start with just 2 time frames. You don't need 3 for right now. I often will use 3 if I want to fine tune an entry, but 2 time frames will do most of what you need. 2 time frames will do most of what you need. So don't worry if you can't get 3. Oh, I see. All right. So yeah, follow what Tig is saying. Tig has got a workaround for the 3 charts. Okay. So Anne, and I have to read it like Anne says it here. So be aware of fundamental analysis on long holds, but pretty much stay with candle price action. Yeah, that's it. That's it. Okay, guys. Hey, tell you what, I think we've probably gotten long enough. I don't want to keep you guys out there. Next time we'll have to bring the proper refreshments to these sessions, of course. So what we will do next week is we will do this at 2 p.m. Eastern or 1800 UTC, which I don't know what time that is in your world. And we'll do kind of the same thing that we did here, but we're going to go into 2 time frames. We're going to do double time frames. Double time frames. So we're going to look at price action from a multiple time frame perspective. So we're going to significantly complicate things. So what I want you to do this week is go back and work on those single time frame price actions and make sure you get it, because I'm telling you guys, if there's one thing that's in this course that you can carry for the rest of your life, it's not going to be some study. It's not even the CHOP index. It is price action. Understanding how to read price trends and understand when a price is reversing or what it would have to do to reverse is the key. That allows you to look forward and become, I would say, you'd be able to anticipate what's going to happen. And if you can anticipate what's going to happen, that means that you're not biased in one direction, which is the worst possible thing that you can do. A bias is the worst possible thing that you can do because you will undoubtedly be on the wrong side of the price bias. That's the way it works. That is the way it works. The market's job is to figure out what your bias is and take the other side of it. So, all right, guys, thanks for hanging out with me here tonight, and thanks for your excellent questions and terrific response. Thank you, everybody. This will be up and rendered here literally in minutes. So if you want to go back and read something or understand something or wonder why I put funny looking Spotify things up on the screen, you can go back and check that out. Okay, guys, thanks everybody for a great evening, and I will see you in the session next week.